Welcome. I'm going to be explaining and comparing the flat income tax versus the fair tax. And as well, I'll be discussing some of the current GOP proposals. You can find a great deal more information on my website, sceldridge.wix.com/sceldridge. Also, please feel free to call me with any question, constructive criticism, or just to discuss these matters at 423-532-7337. I'd like to review the benefits of my version of the flat income tax. Mine would replace the income and estate and gift taxes, but not the Social Security and Medicare taxes. Note that I put quotations around the word taxes. Those are not really taxes. Those are partial payments for your own personal pension and retiree medical benefits. And we also pay for the benefits of some of the poor. Mine has a 10% rate with no deductions, no exemptions, no credits. Business income is taxed only once. That is, dividends from corporations would not be taxable in the hands of the shareholder. Also, they would be taxed on a very, very simplified basis. The IRS would be neutered. It has very little to do. Individuals have no deductions. Their income is covered by Forms 1099 and W-2. Businesses have very simplified deductions as well. I put a special provision in mind which says that if an entity is licensed by its state as a not-for-profit entity, then there's a presumption that it is not taxable, it's not a commercial entity for federal income tax purposes. Compliance in terms of time, energy, and costs would be greatly minimized. You could do your tax return on one page in 1 hour without the aid of a CPA, and even for a business. The 10% is both biblical and popular. 10% is low. There would be no more need to plan your entire life around the income and the estate and gift tax. At only a 10% rate, there would be less tax avoidance or evasion. Not none, just less, so that today's level of evasion and avoidance would come down somewhat. There would be more freedom. Once you've paid for your own Social Security and Medicare, you get to keep 90% of every dollar you earn without hassle and without cost. I think this would unleash an economic boom. I have a special provision in mind which says that tax revenues from this that exceed the baseline amount of revenue that Congress expects to get from this bill over 10 years must be used to reduce the 10% tax rate. I submit that my flat income tax is fairer, in that, for one thing, there are no loopholes for the rich or for corporations. Everyone who has income would pay for government services, and quotes around the word services. More people have an interest in what Congress spends money on, and this really is the key. The republic cannot survive when half or less of the people pay all of the tax. Congress will pander to the majority that does not pay tax, and the republic is doomed. My flat income tax is the least impractical, the least traumatic, evolutionary rather than revolutionary, giant step in the right direction. It's not that it's practical, or it is not that it isn't traumatic, but these are less so than something that's more dramatic, such as the fair tax. As such, my plan will receive less resistance from Congress than some other plans that are dramatic like the fair tax. Not that it will not receive resistance, but it will be less than those other more dramatic plans. In sum, my flat tax delivers all of the benefits claimed by the fair tax, but which the fair tax cannot and will not deliver. You can see more of the details about my flat income tax at this link. It's on my flat tax page on my website. Currently, there are two different flat taxes in Congress. One that's been around for a while is H.R. 1040, with no Senate version at the moment, and there's also H.R. 1824 with a Senate version 929. The two sets of bills are not identical, but they're close enough to be reconcilable. These bills would also replace the income and estate and gift taxes, not Social Security and Medicare, just like mine. They tax only 4 items of income. I would tax more items of income. They have a family exemption of between $40,000 to $46,000 for a family of 4. Under mine, they would be 0. Notice I have an asterisk. As a political compromise, I would put in a $30,000 exemption for a family of 4 initially, but that phases out over 4 years, so that at the end of 4 years, it's 0. These bills have a 17% tax rate, actually 19% for the first 2 years. To my bill, it would be only 10%. Like mine, the bills have no tax credits, primarily no refundable tax credits, and this makes these bills very brave. It's a big step in the right direction. Like mine, business income would be taxed only one time. These would have a business income tax on fringe benefits. Under mine, the employee pays the income tax on the fringe benefits. One of these bills says it's optional that you can have this flat income tax or the old system. I say that's a waste of time, and under mine, the new system would be mandatory and we get rid entirely of the old system. The GOP hopefuls have offered us some glimpse into the specifics of their tax proposals. I'd like to offer you what I look for in those proposals, and understand I'm looking deeper than just what it would do for taxes per se. The specifics of what they propose expose to me what they really have in their heart. What are their true principles? What are their true politics? The first thing I look at is whether their proposal would tend to increase or to decrease the already dangerously low 50% of the population who pay all of the taxes. And don't forget that 50% includes liberals. If that percentage declines, we're in deeper trouble of losing the republic. Let's say, for example, if the 50% declines down to 40%, the rascals in Congress will steal even more from the minority 40% to buy the votes of the majority 60% who pay none of the taxes. That's a disaster. Economists say that reducing that percentage creates what they call infinite demand for more government services, in quotes, and more wealth redistribution. It would accomplish these goals via tax credits like refundable tax credits or by high family exemptions that eliminate some families from the tax base entirely. So what I look for is a proposal that increases that 50%, not decreases it. Ultimately, we need to get the 50% up to 95%, but that's going to take some time. So again, the proposal should increase the 50%, not at all decrease it. Similarly, I look at whether a proposal has progressive rates, which punish wealth by definition, and with family exemptions. In this group, everyone pays tax, except that this creates a smaller percentage who may pay the largest percentage of the tax. So, for example, 10% of the people may pay 90% of the tax, and 90% of the people pay only 10% of the tax. I look for a proposal that makes that more even. the 90% should pay more than 10% of the tax. After all, our founding fathers decided against having the mob of democracy, where the mob can vote itself the wealth of the minority. I would ignore economic hype about jobs and GDP growth. For example, the FairTax claims that our economists have noted that the FairTax would increase gross domestic product by 10% a year over several years. People, I suggest to you that you put those economic claims into the same category as this pill will cause you to lose 50 pounds in 5 days, or this cream will grow hair overnight. They're nothing but marketing, hype, and change. Economists cannot predict anything. A mature economist wrote an editorial in the Wall Street Journal several years ago in which he admitted that there are far too many variables for an economist to be able to predict anything. And so while they're very bright people and they have brilliant mathematical models, they're all based on assumptions that this will work and that will work and this will happen and that will happen. It's still all theoretical, and nothing is predictable because there are far too many variables. Another important thing is to be very, very cautious because you will see and hear many types of deceptive claims. And what you really need to do is go to people who are more expert than you, perhaps, and get some more detailed analysis of these things to see if these claims make any sense. I want to use one illustration. The FairTax claims that there are trillions and trillions of dollars overseas that the FairTax will bring home and will cause our economy to boom. Let's take that in pieces. First thing, you have to look at the underlying facts. Are there trillions of dollars overseas? And some of it's hidden, you'll never know. Okay. Secondly, after you determine the fact of how much there is available to be brought home, you must think about whether or not this provision will in fact accomplish a bringing home of those funds. It may not be. And third, which is also very, very important, which I see a lot, is this. Even if you assume, just for the sake of argument, that there are X trillions of dollars overseas and the FairTax would bring it home, even if you assume that, what you then have to do is say, well, but do we need the entire FairTax to accomplish this goal? Is there something simpler we can do? For example, if the United States simply adopts the worldwide source of income whereby income overseas is not taxed when brought home, that would accomplish that goal very, very simply, and we don't have to bring along the FairTax and all of its fatal flaws. So the point is, there may be a simpler way of getting something done. You don't have to take the whole package. The GOP candidates mostly favor a flat or flatter income tax rather than the FairTax. Ben Carson proposes a flat income tax. He's told us a 10% rate and no deductions for individuals. He has not said anything about business taxes. Ted Cruz favors a flat income tax to be filed on a postcard, also with no more details than that. Donald Trump favors an income tax, but not at all flat. His has 4 rates, one of which is 0, so there are 3 progressive rates on higher amounts of income, which A, punishes success, and B, pushes most of the tax onto a minority, which is wrong. He also has a number of higher exemptions that would take more people off the tax rolls, reducing that 50%. For these reasons, I reject Trump's tax plan and his tax politics along with it. Rand Paul favors a flat income tax plus a VAT of 14.5%. This is the Laffer-Moore proposal. He also repeals the Social Security and Medicare tax in quotes. I submit to you that it is very dangerous to remove whatever connection there is between having to pay for your personal pension and retiree medical benefits and receiving those benefits. And I reject that plan for that purpose. Marco Rubio has an income tax, but his is not flat. He has 2 rates. okay, which is wrong, less wrong than Trump's, but still wrong. He also expands refundable tax credits. I reject this. I think we should have one rate, and there should be a reduction, elimination of refundable tax credits, not an expansion. Jeb Bush has an income tax, but his has 3 rates, and it also has higher exemptions. So this violates both of my principles. I reject Mr. Bush's plans. Mike Huckabee alone champions dramatically the fair tax. I'm now going to explain the fair tax. The bill was first introduced in Congress in 1999, so it's been around for 17 years. Not really going well. It is lobbied and marketed by a group called the Americans for Fair Taxation, AFFT for short. It's now a national grassroots organization. It was originally founded by a wealthy Texan, Leo Lembeck II, and he passed away not long ago, and his son Leo III took over. In short order, Leo III told the faithful to forget about the fair tax and move instead to get the 16th Amendment repealed first. And with that, he turned around and left and turned the group over to the grassroots organization, which is now organized in almost all states. The AFFT fears my challenge to debate them. If they're so right, you would think that they'd welcome the opportunity to debate their biggest critic in a full and fair debate, and if they're right, they'd win. But instead, they run away and hide. Only once in a while, I can embarrass them into a third-party sponsored debate. The fair tax people have offered a couple of rebuttals. I say that in quotes because they're not really rebuttals, they're just more propaganda. The best one is the Georgia Fair Tax Rebuttal. They're all three the same. And you can find that and my response to it on my website. There's the shortened bit.ly link, but their rebuttal and my response to it can be found on my website. Also on my website is my summary letter to the editor, and there's the bit.ly link to that, but it's also on my site. There in 2 pages, you will see a very condensed summary of the fatal flaws of the fair tax. The fair tax is a national retail sales tax. It is not a VAT, and it's not a filed consumption tax. It's a retail sales tax paid at the cash register. It would tax virtually all goods and services. There is an exception for tuition and for used goods. And you notice that I have a question mark there. Later on, we'll talk about the fact that I think that exception for used goods might be a cruel hoax. There is no fair tax on business-to-business sales. There's only a tax at the final retail consumption level. Federal and state governments must pay fair tax on all purchases except for teachers' salaries. This is big. We're going to come back to this later on. There is a prebate, the combination of pre and rebate, paid to all families so that the poor pay no fair tax, as if we all agree with that principle. I don't. I think everyone should pay some tax. And we're going to spend some time on the prebate. First, take-home pay does rise because there are no longer any income or payroll taxes to be withheld, or income taxes otherwise to pay. But what the fair tax people don't tell you is that prices would go up by 27 to 30%. And think about it. If you're not paying your taxes through your salary or through estimated tax payments, then you've got to pay it somewhere. You've got to pay it through retail purchases. In fact, at first, the fair tax people said that prices remain the same, that you get a raise and prices remain the same, which makes absolutely no sense. They did that based on an economic paper issued by Harvard's Dale S. Jorgensen. And what he wrote was that prices will go down 22% over 30 years. The FairTax people conveniently ignored the 30 years and said it comes down right away. But Jorgensen said that prices come down by 22%, so that a $100 price comes down from $100 down to $78. And he said that you would then add $23 of FairTax back, and so the price comes to $101, which is basically the same as the $100 starting price. Later, Professor Jorgensen came out and clarified his earlier paper. He said prices are not going to come down by $22 on a $100 purchase. They'll come down maybe between $7 and $8. That translates to a 21% price increase after adding FairTax. When Professor Jorgensen did that, then AFFT Chief Economist Karen Wolbe said that no, Professor Jorgensen was not the guru. He was just one of many economists that they asked, and she claims that prices would come down by 12.5%, and then when you add in FairTax, they would rise by 14%. However, I took a look at the numbers that she gave and researched it. Her 14% is wrong. Her 12.5% decline is really more like Professor Jorgensen's 7 to 8% decline, and therefore her increase should be more like the 21% that Professor Jorgensen came up with. But we can't stop there. That 21% is just the basic minimum increase that is possible here. Like all calculations, it makes assumptions. That 21% assumes that 100% of the potential 7 to 8% decline would actually occur and be passed on to customers. I say that that's irrational. First of all, that 7 to 8%, half of that is the employer's share of payroll taxes. And I, an economist, believe that many business people view that as a cost of labor, and that would be preserved and dedicated to labor costs, either raises or more employees, and thus not be available to reduce prices. So it's only 3.5%, 4% that might be available for price reduction, and that 3.5%, 4% is really subjected to many different constituencies who are all grabbing for it. I think it's more rational to assume that only half of that 3-4% would be devoted to price reductions, if that. And that results in my 27 to 30% price increase after considering FairTax. The FairTax statute itself, Section 509, demands that the merchant give you a receipt for the goods you paid, including the taxes. They direct that on line 1, the merchant must state the price before adding FairTax. Let us assume, for purposes of this illustration, that the amount before FairTax is $100. Now, I'm going to tell you that on line 2, they direct that the merchant tell you the dollars of FairTax you will pay. This is a test. How many of you people watching this believe that the amount on line 2, the dollars of FairTax, will be $23, and the amount on line 3, the total, will be $123? Now answer honestly. For those of you who answered that it would be $23 and $123, you have been fooled, as many educated people have been fooled. The FairTax on this illustration would be $30, and line 3, the total, would be $130. The FairTax people will not dispute that if the amount on line 1 is $100, the amount on line 2 is $30, and the total is $130. They also direct that the merchant tell you on line 4 that the FairTax rate is only 23%. And you're scratching your heads to say, how did they get that number? What they don't tell the merchant to reveal to you is that they derive the 23% figure by dividing the $30 of FairTax by the $130 total. Not the $30 divided by $100, the way you and I calculate sales taxes. Now, I tell you this not solely to expose the fraud In this presentation, it's a 30% sales tax, not a 23% sales tax. But also, for later clarity, sometimes when you have just the total, $130, you know that in order to solve for the fair tax, you have to multiply that by 23%. If you know what the $100 price before tax is, then you add 30%. But sometimes you only know what the total is. I'm now going to compare the two taxes in a variety of aspects. The first three I call my socio-political aspects. First is in taxing the poor on their earnings. The flat taxes would tax the poor on their earnings, at least on Social Security and Medicare taxes, which, as I said, are not really taxes. Those are contributions for their own personal benefits. My flat tax would tax the poor on their earnings from $1. The other version of the flat tax would not tax the poor on their earnings until they exceeded their personal exemptions. The fair tax, of course, does not impose any tax on the poor, no income tax or no Social Security tax. Second category is in progressive. The flat tax, by definition, is less progressive. There is only a single rate of tax, and there are no refundable tax credits. The fair tax, by comparison, is more progressive. In their advertising, they show that as your spending levels rise, because of the effect of the prebate, your effective tax rate rises. Also, I have a 2-page paper which contains several illustrations of their own words in which the fair tax people market the fair tax as being more progressive. The third area is in welfare. The flat taxes have less tax welfare. Of course, the refundable tax credits disappear. Under the fair tax, there is more tax welfare. Here's the bottom line. Under the fair tax, poor people, 1, pay 0 fair tax. 2, they pay 0 for their personal Social Security and Medicare benefits. And 3, they all receive a big fat tax welfare check. Refundable tax credits on steroids. Thus, if you're for the fair tax, you're a progressive socialist. If you're for the flat tax, you're a conservative constitutionalist. The next area of comparison is the IRS. Under the flat tax, as I mentioned, the IRS is neutered. It really has very little work to do. Under the fair tax, although they claim the IRS is abolished, the IRS may very well wind up to be far worse, and I will explain that as we go along. Compliance. Under the flat tax, compliance would be greatly simplified. One page in 1 hour, even for a business. Under the fair tax, it might also be simpler at first, but I think that it will become more complicated, which is why I put a question mark next to simpler for the fair tax. Fair plus flat. What I mean here is the exposure to winding up with both an income tax and a consumption tax. If we stick with an income tax under my flat tax, there is a lesser risk of us winding up with both taxes because Congress is loath to add on a VAT while we still have an income tax. However, if we move to the fair tax, I submit that the chance is greater that we wind up with both, because it's much easier to bring back an income tax that we've had for over 100 years, and I submit that Congress will have to bring back an income tax. More later. The next area is in sales taxes. With my flat income tax, the only sales tax we have to deal with are current state and local sales taxes, which are not a problem. However, under the fair tax, as consumers, we would be facing a 35 to 45 plus combined federal and state sales tax. That's a 30% fair tax plus 5 to 15% state and local sales taxes. I think those rates are so high that they would cause a taxpayer revolt that would destroy our retail sales sensitive economy. Hidden taxes. Under the flat tax, whatever taxes are hidden in the cost of goods are reduced somewhat. Under the fair tax, which claims to be transparent, there are several hidden taxes. For one thing, there's at least 20% of taxes that are hidden, and I will explain that. And on top of that, there's another 20-30% that's missing that will result in new taxes, and I will explain that as well. We're going to be talking in the next few slides about several supporting details. We'll talk about increasing tax welfare, how the IRS is not really abolished, talk about hidden taxes, the impact on seniors, and buying a house. The prebate is actually advertised by the fair tax people, recall, as merely ensuring that poor people don't pay fair tax, as if we all agree with that, and I don't. In actuality, the prebate is more tax welfare. Instead of just compensating them for any fair tax they might pay, the prebate overpays the poor for any fair tax that they might pay. With the prebate, we're all on welfare now. Under the prebate, every family gets a monthly check. The check is based on assumed poverty level spending. It is based on the number of family adults and children. Those are important phrases. The bottom line, the rich pay fair tax net. That is, the fair tax they pay exceeds their prebate checks. The bottom line is that the poor get more tax welfare. The prebates that they get exceeds the fair tax that they pay. Many would depend on a big monthly check from the government. And the government can more easily increase prebate welfare. This is how the prebate is calculated. An adult is deemed to spend $11,770, including the fair tax. So remember, under their way of looking at it, if you have the total including fair tax, the fair tax is 23% of the grand total, so that person would have paid $2,707 in fair tax, and that is the prebate for that person. A child is deemed to spend $4,160, including fair tax. So multiply that by 23%, and a child gets $957 prebate, because that's the fair tax that they would pay for the year. The difference between an adult and a child is $7,610 of assumed spending, which includes fair tax, so multiply that by 23%, and therefore an adult receives $1,750 more in prebate than a child does. The prebate in total is inflation adjusted every year. It's nice to have inflation protection. The prebate is paid in monthly installments. While the fair tax people tell you that the prebate is based on HHS tables, in fact, the prebate first inflates HHS spending. Next, the prebate assumes, there's that word again, assumes that 100% of all spending incurs fair tax. I explained to you that the fair tax first artificially increases the amount of spending from the Health and Human Services table. It does so in three ways. The first of those is the marriage penalty. Husband and wife get an actual prebate of $5,414 under the fair tax. If they had used the Health and Human Services figures, the prebate would have been only $36.64. The fair tax gives away an extra $1,750 gift of your money. Health and Human Services figures use the terms first person and second person. Okay? Health and Human Services second person spending amount is the same whether it's an adult or a child. The Health and Human Services table assumes that the first person carries the rent and every other person thereafter then spends the same amount of money. They don't care if it's an adult or a child. The marriage penalty, therefore, did not exist. The fair tax made it up out of whole cloth, just to give away more of your money. The next category of the fair tax's over-assuming spending is more adults. Let's take the example of two sisters who live together. They would get a fair tax prebate of $5,414. However, if they had used the underlying HHS tables, the two sisters living together would have gotten a prebate of $3,664. The result is the fair tax gives away an extra $1,750 of our money. The fair tax accomplishes this by a narrow definition of the word family, which creates extra adults and therefore more $1,750 gifts. Under the fair tax, you can have multiple families, adults, in one physical household versus only one family for the Health and Human Services household. The third way that the fair tax assumes too much total spending is by assuming that the same amount is paid to everybody in the range. That is, a family of four is deemed assumed to spend $31,860 by the fair tax. Actually, what the HHS table says is that a family of four is in poverty if it spends anything between 0 and $31,860, just no more than $31,860. If we took the total assumed spending of $31,860, including fair tax, times 23%, they would pay $7,328 in fair tax, and therefore that's the prebate they get. So they are targeted to pay 0 net fair tax after prebate. That $7,328 is paid if these people spend anything between 0 and $31,860. But remember, the fair tax assumes they spend $31,860. Let us suppose that this family only has $20,000 to spend in total, including fair tax. So the $20,000 times 23% yields $4,600. The result is that the prebate overpays this family for any fair tax they paid by $2,728. And if they earn that $20,000 working, they would have paid $1,530 in Social Security and Medicare taxes, which they don't pay. And so this family has a total benefit of $4,258 on this one item. Now, I've shown you three ways in which the fair tax assumes more spending than the HHS tables would assume. Next, we're going to move on to see several ways in which people may spend money without paying fair tax, while the fair tax assumes that they pay fair tax on every dollar of spending. The first illustration of spending without paying fair tax is in time and cash welfare as well. Let's assume a family gets total welfare for four people of $31,860. Some of that would be paid in kind. Medicaid and housing, for example, may be paid directly to the provider, not given to the individual in cash. If the cash that people spent is only $20,000, the maximum fair tax they would pay is $4,600. The prebate would still be the same $7,328. That's $31,860 times 23%. The result is that the fair tax overpays by $2,728. The poor do not pay fair tax on in-kind welfare. We pay them. But then the fair tax reimburses the poor for fair tax that we paid. This makes no sense. Another way that the poor do not pay fair tax, while a prebate assumes that they pay it on every dollar, is if they buy used goods. A family of four, again, is assumed to spend $31,860. $31,860 times 23% fair tax is $7,328 of rebate. Suppose this family buys new goods for only $20,000, which includes fair tax at 23%, so they would pay fair tax of only $4,600. The result is an overpayment of $2,728, plus any Medicare and Social Security tax forgiven. Now, this all presumes that there really is an exemption for used goods, and later on we'll talk about the fact that perhaps that exemption is just nothing more than a cruel hoax. Another way that the poor will spend without paying fair tax is by evasion. Again, our family of four is deemed to spend $31,860. $31,860 times 23% gives them a $7,328 rebate. Now, let's assume this family legally spends only $20,000 and avoids the fair tax by buying on the black market. They will have paid fair tax of only $4,600. The result is that the rebate overpays them by $2,728, plus any Social Security or Medicare tax forgiven. Another category of spending without paying fair tax is the general other exempt areas. Again, assume that a family of four would spend $31,860 times 23% gives us the assumed fair tax paid, which is the same as the rebate, $7,328. Let us assume that this family spends $3,000 on education, federal and state and local taxes and fees. The result would be that they would pay fair tax on only $28,860, which at 23% gives them $6,638, which means that the rebate would overpay them by $690. $690 is 23% of the $3,000 spent on all of these otherwise exempt items. I have summarized this into an illustration which I'll show you on 2 slides. First, the FCA, which is the Family Consumption Allowance, which is the formal name of the rebate. We have a husband and wife, and a wife's sister lives with them, and they have 2 kids. The rebate assumes that these people spend $43,630, which includes fair tax, so that multiply that by 23%. It assumes that they would pay fair tax of $10,035, and that's the rebate it gives them in 12 monthly installments. I have mentioned to you already that the rebate gives them unnecessarily a $7,600 $10 spending assumption, and therefore an extra gratuitous $1,750 in rebate. The sister, I explained, gets an extra $7,610 in spending and a gratuitous $1,750 in rebate. The reduction to actual assume the family spends $3,000 less than the $43,630. It gives them a $690 gratuitous rebate. So in sum here, the rebate over-assumed spending of $18,220, and therefore it gave away $4,190 in excess rebate that was unnecessary. It was more than the HHS tables would have given. Actual spending, this family actually spends in total $25,410, and they pay maximum fair tax of $58.45. I'm going to carry those numbers over to the next slide. Carrying over from the prior slide, the actual spending was $25,410, and a maximum fair tax that they could have paid is $5,845. In-kind welfare, let's assume, was $6,000, which results in an overpayment of fair tax of $1,380. Used goods, we assumed $5,000, which resulted in an overpayment of rebate of $1,150. Black market purchases, we assumed at $5,000, which resulted in another $1,150 overpayment of the rebate. And the other exemptions we assumed at $3,000, which resulted in $690 of overpayment of the rebate. In total, this family spent, without incurring fair tax, $19,000 out of the $25,410 total that it spent. And therefore, it escaped $4,370 of FairTax. The result of that is the family bought new goods and incurred fair tax. They spent only $64.10 buying new goods, and they paid fair tax of only $1,475. Thus, the fair tax overpays any fair tax paid by the poor by $8,560. The fair tax people claim that it simply pays them back for any fair tax they pay, but I say no. Here it overpays by $8,560. Now suppose it only overpays $7,560. After all, this is just an illustration. Suppose it only overpays $6,560 or $5,560. Why in the world are we giving several $1,000s in cash plus paying them free Social Security and Medicare and letting the poor off with no fair tax? This is insane. Now, these two charts, were shown to the FairTax senior members, one of which was the vice president of the AFFT, and his comment for this was not to challenge a single one of the points that I made here, the 3 areas of overpayment and the 4 areas of payment without paying fair tax. No, his only comment was as follows, quote, "We have to give the poor a ladder out of poverty," close quote. Allow me to translate that for you. According to the fair tax people, today's welfare is not sufficiently attractive in comparison to work. They want to make tax welfare even more attractive in relation to work than it is today. This is only in the mind of socialist people. This is absurd. Rhetoric, socialist nonsense. One big myth that the fair tax people perpetrate is that the IRS is abolished. They play on our hatred and anger at the Internal Revenue Service. The fair tax brings with it its own brand new IRS. That is the STAA, which stands for the Sales Tax Administration Authority. The STAA is empowered to by the statute and may in fact audit consumers in a way that is more intrusive than the IRS. And I'll show you that. The fair tax people simply deceptively say they won't do it. They just won't do it without explaining that. The fair tax people often say that, oh, the federal government is no longer involved. The states are going to handle this whole thing. Well, the fair tax is a federal tax. It's not a state tax. The states may be federal agents, but the feds will be fully in charge. People, we're not going to have 50 different fair taxes. There's only one fair tax, and it's run by the federal government. And the old IRS will more than likely return, and I will explain. The fair tax statute itself says that the consumer is liable to pay the fair tax. Section 101D, liability for tax, says that, in general, the person using or consuming the taxable property or service in the United States is liable for the tax imposed by this section, the fair tax, except as provided in paragraph 2, which is next. The exception to the consumer's liability to pay the fair tax is that the consumer must receive a receipt. Section 101D2 says the exception where the tax is paid to the seller, which says a person using or consuming taxable property or service in the United States is not liable for the tax imposed by this section if, and only if, the person pays the tax to a person selling the taxable property or service and receives from such person a purchaser's receipt within the meaning of Section 509. Ask yourself, how is the STAA going to know if you received a receipt unless they ask you to produce it? As a good strategist, I put myself in the position of the STAA. What would I do if I were in their shoes? The STAA first has to ask itself, how do I know how much fair tax any taxpayer should have paid in total? To figure that out, the STAA must know how much that person spent on taxable purchases in total. In order to figure that out, the STAA needs to examine 100% of all of that person's financial records to determine how much the person spent on taxable purchases. The STAA might very well ask you to produce all fair tax receipts. And don't forget, the fair tax people claim that you don't have to keep any receipts. It did not take long to then strategize that what I would do if I were the commissioner of the STAA is design a very simple annual pre-audit questionnaire that I would send out to every household in America that would later convert to an annual required filing. On line 1, I would ask how much that you spent. Attach a complete analysis of all your accounts and assets, receipts, and copies of all records, at least copies of summaries. On line 2, I would say subtract your exempt purchases, used goods, tuition, etc., and I want a schedule with receipts and documentation. Line 3 would be line 1 minus line 2, which is taxable purchases. Line 4, since the total on line 3 includes fair tax, multiply line 3 by 23%. That's the total fair tax that you owe me. Next, subtract the total of all fair tax receipts that you have attached to this filing. Line 6 is the fair tax that you owe me, which is line 4, the total fair tax due, minus line 5, the total receipts you have. That's what you owe me. Don't bother to calculate interest and penalties. We will do that for you. Now, what I just explained to you about STA auditing is not going to happen at first. It'll happen later on. First, this is going to happen. The old IRS comes back with the new income tax. The fair tax has a laughable sunset clause, which says that if the 16th Amendment is not repealed in 7 years, then the fair tax is automatically repealed. Understand that. It does not and cannot repeal the 16th Amendment. It just purports to disappear if the 16th Amendment is not repealed in 7 years. When I read this, I started to laugh. I thought about the sheriff in Blazing Saddles. For those of you who haven't seen it, go rent it. It's one of the greatest comedies of all time, and it really makes a lot of fun and mocks racism. In it, the sheriff, Cleavon Little, comes riding into town where he faces a hostile crowd that crowds around him. He gets them back by taking his own gun, and he puts it to his head, and he threatens to pull the trigger. He says, if you don't get back. And the crowd cows and pulls back. And he makes his way to the jailhouse, where he sighs in relief, and he says, boy, are they stupid for thinking he was going to pull the trigger. People, Congress is not going to sit there and say, well, the fair tax is the only tax we have and it's about to expire. So what? When it expires, then we'll figure out what to do then. Not going to happen. You got to be kidding. Congress is certain to repeal this sunset clause. The 16th Amendment will not be repealed anytime soon. I know the fair tax people fantasize that people will be so euphoric about how wonderful the fair tax is, and they won't want the income tax back, that they're going to insist that the 16th Amendment be repealed. Don't hold your breath. Long before the 7 years is up, Congress is going to repeal the sunset clause. Congress will use the emergency of a big revenue shortfall from evasion and avoidance, which the fair tax absurdly assumes to be zero, to enact a brand new income tax. That evasion and avoidance will cause a, who knows, but a $600 to $900 billion shortfall, which Congress must plug, and they will accomplish that with a new income tax because they cannot rashly increase the fair taxes rate from 30% up to 50 or 60. A new income tax makes a whole lot more sense. Cato Institute has a warning similar to mine. They don't go through my scenario, but they say that if you don't get rid of the 16th Amendment first, then you're going to wind up with both taxes. In addition to fair tax's explicit 30% retail sales tax, it hides even more in other hidden taxes. To begin with, we just discussed the fact that the fair tax's 30% must rise or exemptions repealed in order to make up for evasion and avoidance. I really don't think that's going to happen because the fair tax's 30% rate is already absurdly too high. Instead, I believe that we would have a new income tax to plug the $600 to $900 billion shortfall from evasion and avoidance. Now, in addition to that, fair tax's 30% really hides another 20%. First, state and federal budgets must rise to pay fair tax. That is, prices will go up 27 to 30%. This is the fair tax's Jonathan Gruber moment. Remember, Jonathan Gruber with Obamacare told us that they didn't want to tax the people. It would have required a higher tax on individuals. They didn't want to do that. Instead, they taxed the insurance companies who passed that tax on to individuals. They thought people would be too stupid to realize the federal government was taxing them. Well, here, the fair tax really needed to be a 42% rate, but they hid 12% of that by having state and federal governments pay that. State and federal governments could only get that money from you. Also, the federal budget must rise. These are not taken into account in the fair tax calculations. First of all, that 27 to 30% price increase causes an automatic increase in Social Security and in all federal pension COLAs, cost of living allowances. And by the way, the fair tax people knew that their original claim that prices don't go up was wrong because they went out of their way to design a special provision in Social Security to make sure that if the COLA people took into account prices before adding the fair tax, that the fair tax assured that the price increase would be measured with the fair tax. Also, the federal budget will rise due to higher fraudulent Social Security benefits. Today, when you file a Social Security wage report to report your Social Security earnings, which you will have to continue to do under the fair tax, you have to pay a tax for every additional dollar of salary that you report. Under the fair tax, that tax disappears. And so there is more of an incentive now to cheat Social Security. It doesn't cost you anything if you report higher wages. Just think about what some group like Acorn will do with this. The original fair tax rate is too low by about 5%. This is not me saying it. This is Beacon Hill Institute, who was hired by the fair tax people to write economics papers around 2006 and 7. The fair tax or the state and local sales tax may cascade upon one another. I think what will happen is that the fair tax will be paid on top of the state sales tax. So, for example, if your state sales tax is 10%, you'll pay another 30% of that 10%, or an additional 3% in tax. Now, that will reduce a little bit the loss from evasion avoidance, but that remains to be seen. The other, perhaps hidden tax is the exemption for used goods. I say used goods may well be taxable, not exempt, and I'll explain that in the next slide. As I mentioned, the exemption for used goods may turn out to be a cruel hoax, and used goods may be taxable. People, you cannot use the term used goods the way you and I would use that term in lay language. The term used goods means only the way the fair tax statute defines it, and nothing else. So we must understand how the fair tax defines the term used goods. We'd start by going to Section 2, Definitions, A in General. And there we'd find on the list number 16, the term used property means A, with respect to property that was created after the fair tax came into existence, property on which the fair tax imposed by this Section 101 has been collected, and for which no credit has been allowed under Section 202, 203, or 205. As a practical matter, people who buy used property will not have the proper documentation that the person they bought it from paid the fair tax, and they will not be able to document and prove that the credits allowed under Section 202, 203, or 5 have been claimed. The exemption is a practical impossibility. Alternatively, if the goods were created before the fair tax, you will have to prove that they were created before the fair tax and that they were held for other than a business purpose. Again, it will be practically impossible to produce this documentation, and hence the exemption a cruel hoax. I get asked quite often, what is the impact of the fair tax on seniors? And it is substantially negative, although I'm not trying to play off one group against another. Seniors would start to pay for Social Security and Medicare tax all over again because the funding of Medicare is included in the fair tax. They thought they were finished paying, but they're not. Seniors would pay a second fair tax on income on which they already paid income tax. Actually, this applies to everybody, not just seniors, but it particularly affects seniors. Seniors lose purchasing power. Prices rise 27 to 30%. And it's only Social Security that gets collated, and maybe a federal pension that gets collated. But every other pension they have is not collated. A colleague of mine, his wife, did some calculations and showed that middle-class seniors would pay more in fair tax than they would have paid in income tax. Seniors married between $30,000 and over $100,000 of income would pay more in fair tax than they would have paid in income tax. Single seniors from $30,000 to about $60,000 would pay more. And this was done with very conservative assumptions. It assumed that only 75% of what was spent incurred fair tax. I often get asked about the impact of the fair tax on the real estate market, new homes and used homes. If a home today costs $500,000, I say the fair tax price of that house will be about $700,000. That assumes 30% fair tax and 10% state and local tax, because the states will conform to the fair tax. It's an increase in price of $200,000. Next, the down payment. Today is $100,000, 20% of $500,000. Under the fair tax, it goes to $300,000. The difference is that you'll have to pay the entire fair tax and sales tax on closing. The banks will not lend on the sales taxes. The banks will be subject to three at least future tax risks that would reduce the price of that house from $700,000 down to $500,000. The banks cannot assume that risk. If that risk occurs, their mortgages are underwater. So as a result, the buyers of homes are exposed to future price declines. This may also affect existing home sales. While the owner of an existing home on the date of the fair tax gets a windfall, his value goes up, in this case from $500,000 to $700,000, it may be harder to sell that house because it's going to be harder for the buyer of that house to come up with the financing to buy that house, because the bank will not take that risk even for an existing home, because those tax risks would also impact the values of existing homes. I hope you've gained a lot out of this comparison of the flat income tax versus the fair tax. There is yet more information on my website, sceldridge.wix.com/sceldridge. And please feel free to call me with any question, comment, or to discuss these matters at 423-532-7337. Thank you.